Welcome to In Depth for a closer look at what is making mining headlines in the Americas. Teck Resources is working at full steam on studies for expansion and greenfield projects in a bid to boost production amid rising prices and demand for its key commodities. Mining Week's deputy editor for North America, Lizzo, who is based in Toronto, Canada, joins me to discuss the issue. Welcome to the show, Lizzo.
Thank you, Martin.
Teck Resources has just published its results for the fourth quarter of 2010. What were some of the highlights of those results?
Well, the company reported fourth quarter adjusted earnings, so that's excluding some once-off items and non-cash charges and so on, of 548 million Canadian dollars. So that was actually a 76% increase compared with the same period a year earlier, the fourth quarter of 2009. But it did just miss some analysts' expectations or the consensus expectations for the profit that the company reported. Teck's big three main commodities that it produces are copper, zinc and metallurgical coal. In fact, the company is the second biggest producer of seaborne hard coking coal behind BHP Billiton and its partnership with Mitsubishi. And Teck obviously is taking advantage and enjoying the strong demand and prices for things like both copper and coal. Copper, for example, set a new high on the LME earlier this week on Monday. While metallurgical coal, the supply is being squeezed, as we all know, by the disruptions that we've seen in Australia, which is the biggest producer, exporter of metallurgical coal. And we've seen there the rains, flooding and other weather have affected production there. So certainly Don Lindsay, just speaking on a conference call about the results, mentioned that he expects to see the coal, metallurgical coal markets remaining tight going forward, based both on the Australian situation, but also on just the general supply picture across the world, that it is difficult for not only for companies to maintain their production, but to expand mines and bring on new production is also difficult. So as he sees the demand continuing to grow, he sees that markets will continue to be tight. Of course, Teck has its own problems, had some of its own operational difficulties during the quarter and during 2010. The company actually warned earlier, or in January, that it had seen some things like rail and port constraints related to extreme weather in British Columbia, where it has its coal operations, that had weighed on shipments. And in fact, Don Lindsay, speaking this week, said that although the port issues are being resolved, the company continues to struggle with rail constraints, which continue to be weather related. And then the company's workers at its Elkview coal operations just about a week ago downed tools in a strike. And while Teck has said that it doesn't expect to see an impact on its first quarter production because it's got stockpiles on which it can draw, if the strike continues, it could affect the annual production forecast. In fact, Elkview accounts for about 20% of Teck's forecast production this year. So it could have an effect if the strike continues to go on.
Where is the company looking to increase production?
Yeah, well, continuing with coal, Teck increased its coal production last year by 22% and is expecting more increases this year. And then looking forward, the company is studying the potential restart of its Quintet mine, also in British Columbia. And if that project is approved and goes ahead, that could add an extra 3 million tons a year by around 2013, the company is expecting. The company is expecting a lot of growth and is planning a lot of growth in copper production going forward over the next, say, 5 to 10 years. Teck actually just last year commissioned its new Carmen de Andacollo copper concentrator, so benefited from that additional production coming on towards the back half of the year. And we'll see now that it has the first full year of production from the operation that will help copper production this year. Looking forward, it's got studies underway. They're studying a copper concentrator project at the Quebrada Blanca operation, that's in Chile. There's also a new greenfields mine, Relincho, also in Chile. There's a pre-feasibility study underway. And then the Galore Creek project that Teck owns with Nova Gold, another Canadian company. That's a copper gold project in British Columbia. And there's also studies underway. In fact, we're scheduled to hear some new numbers on that project by mid-year. And so those are all projects that are being studied and one would expect to see starting to move into construction and eventually production as we move forward. And then Teck also has some oil sands projects. It's got its own projects that it's studying itself, and then also a 20% stake in the Fort Hills project that is managed by Suncor. So all of these things, the company really is looking to ensure that its production not only is sustained going forward, but that it's got big production plans. Or big expansion plans going forward. And just interestingly, obviously there's a lot of capital that's going to need to go into these projects to get them up. And the analysts have questioned Don Lindsay, the CEO, how much of this do you expect you'll be able to fund internally, and will you need to look elsewhere at the capital markets for other financing? And he said that just based on their internal model, looking at not only the cash flow that the company will be drawing in based on current prices, but the fact that the projects are quite staggered, that some are in pre-feasibility stage, some are in feasibility stage, so they will be staggered over several years, that the company actually at the moment believes they could fund all of these projects internally. So I think that's something that should be interesting to analysts and to shareholders.
The group is obviously enjoying some strong cash flow. Is there a chance it might consider acquisitions?
Yeah, it's an interesting question. Certainly there's a lot of M&A excitement going on in North America and elsewhere in the world at the moment in the mining sector. And as you say, Teck will be drawing in a lot of cash. Obviously, a lot of that will be going to these projects that I've listed. But certainly, CEO Don Lindsay has said, he said on previous occasions that it would make sense for Teck to get into the iron ore business. Obviously, the company's already a big player in the metallurgical coal sector, and iron ore is the other big ingredient that goes into the steel making process. So he has said he sees the logic in that. He would be interested in it, but just given the heat in the market at the moment, he's acknowledged, and it makes sense that it would be difficult for the company to find an asset that is not only attractive to Teck, but comes at a price that the company is willing to pay. Secondly, there's in British Columbia in Canada, Anglo American has had its Peace River coal assets up for sale for about a year now. We understand the company's gone through sort of a shortlisting process with bidders. There's a couple of Canadian companies that have acknowledged that they have expressed interest, or they submitted bids for the asset, but Teck is one of the company, or Teck is keeping its lips closed. The company hasn't commented on whether it would be interested in it. But certainly analysts have noted that it could be a good fit for Teck if it was looking for acquisitions. And then beyond that, I suppose it's a case of never say never. Teck, it will have cash. There's a lot of action in mergers and acquisitions at the moment. But on the other hand, the company does have all these projects keeping it busy. So I suppose it's just a case of we'll have to wait and see what happens.
Oh, thank you, Lizzo. Well, that was the show for today. Join us again next week for more news and insight on mining in the Americas. I'm Martin Joaquino in Johannesburg.